Everybody, welcome to Market Insight for the week of August 14th through the 18th, 2023. So starting with our top-down approach and the monthly chart, we have an obvious pullback taking shape. We have an obvious pullback taking shape on the monthly. We're at the top of the supply area from back in April 2022, and we're reacting off of that. And while last month showed less demand and some shortening of thrust in the price action and volume, we don't see any significant supply coming out, do we? Just a normal, normal. So overall, the monthly looks bullish, but we're in a corrective phase. And then we look, of course, to the lower time frames to identify when that correction is likely to be over, right? We identify key levels of support and resistance. But on this chart, we can see that the August 2022 high at 43.27 and a half is the key support level on this time frame. And this would reflect support after the jump across the creek, right? This would be a jump here, right there. And then a backup here, back up to the edge of the creek, right? To test the jump and to test that vertical. This is also a vertical acceleration area in here. So we get a jump across the creek, nice volume, good wide spread, firm close, go a little bit higher, and now we're in a backup to the edge of the creek in a testing action to identify whether or not supply is overwhelmingly present in the market. So at this juncture on the monthly, assuming no significant supply emerges, this area, again, if we get down there, and it's not a given that we're going to get down there, right? This is just looking at the monthly chart and the structural characteristics of the monthly chart. So if we get down there, which is not a given, but if we do, it should be good support. And as we always try to do, we're trying to, think a little ahead of the market. And we do that by identifying key structural levels and where important activity is likely to take place. Okay. All right, let's shift over to the weekly now. And things start to get more interesting and more challenging on the weekly chart. So last week, we reacted off of the significant resistance. We've been talking about this resistance every week here for several weeks now. And we react off it on an increase in volume, right? And we closed firm to the downside last week. And then this past week, the current most recent week, shows a similar sustained volume, right? Basically the same amount of volume. And we get a poor close, although not quite as firm as the other, but a poor close. But note the shortening of the thrust. We're not making the kind of progress down that we did the prior week on the same amount of volume or on similar volume. So we're just not making the same amount of progress down on the same level of effort. Volume is effort, right? That's the fuel behind the moves. So there's some effort to go down, but the result isn't keeping with the effort. And so buyers are putting in, if you will, an effort to hold price around support, around this 44 gate area, actually a little bit lower. And we'll see that more on the daily. Again, not seeing a lot of supply, though we know supply is present because of the increase in volume. So if price is unable to hold the weekly demand line down here, which is right here, or basically last week's low, if we're unable to hold that, we're likely to see price drop lower. First down in the 44.10 area, which is this low here, and then towards that August 22 high of around 43.27. That's the key monthly support, but that's a fair amount away and probably not going to get down there in the next week. So that's still getting a little ahead of ourselves. I would focus more in on the 44.10 area, maybe a little lower than that. And we'll take a look at the daily, shift to the daily, and get some better idea on that. So let's take a look at the daily, and as we do, we can see that the daily looks less bullish, right? You know, although price has been trying to hold in here, we can see that shortening of the thrust around that 44.80 level, roughly where we closed last Friday. It's been trying to hold there. You can see the clustered closes in there and the shortening of the thrust. But on the flip side, it's not shown any ability to rally off of the danger point. More to me, it seems like it's sort of sliding down. Let's just tape read the last week here. So Monday hold support, right? Tries to rally up after a negative prior Friday, tries to rally up and closes well, but it's doing so on non-demand volume. And Monday is also an inside day, so not a particularly strong day. Tuesday fails to hold the highs, Monday's highs, right? Tested support, goes underneath of it a little, and then rallies a bit up to close mid-range. So this was looking more constructive for the bulls at this point. But Wednesday, we come down, couldn't hold the highs, couldn't even get up to the highs, and we come down, close firm to the downside, and we do so on sustained volume. Sellers were pressing on the market here. Thursday was a repeat of Wednesday. Price couldn't hold the highs around Wednesday and Tuesday and Monday, the prior days of the week. Couldn't hold those highs, reversed down, and closed on a large increase in volume. So buyers were able to hold the lows, but it's an outside down day, reflecting weakness. And then Friday, although we get less volume, so selling may have abated a little bit, but the high, low, and close are all the lowest levels of the week, the lowest high, the lowest low, and the lowest close. So again, not particularly strong. So while we can rally from here, there's a good chance we could go down a little bit lower. The market's vulnerable to maybe a deeper drop here. So targets for that drop would include this level. I didn't mark this out. This is 44. I think it's 44. We'll call it 44.10. I think it's actually 44.11. So that would be the first target down here, and then the second target would be this level here. A little bit stronger support, maybe we'll call it 43.65. So those would be the two levels to the downside I would be looking to target this week. And the obvious resistance for the coming week lies along the 43, well, let's call it 43.55 level, if we can get up there. If we're unable to do that, you know, if we come up into this area maybe on Monday, Tuesday, and then start heading down, suggests more weakness and more likely to hit one of these lows down here. Now, a close above this 45.60 3/4 level, a close above that would likely encourage a try for the recent highs around 46, 34.5. Numbers always get to me, right? So let's take a quick look at the major markets here. And considering our major markets, we're seeing the NASDAQ down here leading the others down, right? Leading the way down. And the Dow holding stronger. And of course, the S&P is kind of in the middle there. So the Dow and the NAS offer two key areas to pay attention to. The NAS is not far from a key level of support down here at 14,853, and would be technically oversold at that level. And we would expect, because of that, we'd expect some positive action to come in. Same thing on the Dow at this support level, which is 34,888. It should also hold that, right? Strength came in here. We've got vertical acceleration, jump across the creek, and all of that. So if the Dow gets down to 34,888, and if the NAS gets down to 14,853 around the same time, I'll be watching both of those markets, both to see if they get down there to those levels, and then see how price and volume respond. But we should see, I'm anticipating a more constructive, if we do get down into these areas, I'm anticipating a more constructive response rather than a continued downside, as everything else points to that. All right, so that's it for this week. We have a light schedule for members this week, just deep practice on Thursday at our normal time, and I will see you then. All right, everyone, have a great rest of the weekend and terrific trading next week, and I'll see you on Thursday. Thanks a lot now. Bye-bye.